If you've been looking to buy a home over the past 24 months, you've probably felt like this.
Pressure like a drip, drip, drip that'll never stop. Whoa.
There's probably never been a more difficult time to be looking to buy a house. Initially, COVID hit, then all economists thought the housing would crash due to mass unemployment and small businesses closing down. However, what they didn't know is the government was going to do a massive, unprecedented stimulus program, reduce interest rates to nothing, and that, combined with some COVID-specific related demand, has led to house prices surging for basically 2 years non-stop. I'm Biko Konstantinos, and that's what we're going to talk about today. If you don't own a house, or even if you do, why don't you give this video a like? And please consider subscribing to my channel. My goal is to provide you with quality and up-to-date information and education to support your investing goals. Now let's get into it. So you were looking to buy a home, you got your loan pre-approved for a certain amount, and then prices started to rise. You might have tried to bought a property or two, but you kept missing out, and they rose even further, and you thought, this has to end sometime, but amazing to everyone, it didn't end and it kept rising and rising and rising. So for home buyers who are all ready to go in, it could have been a nightmare 24 months that you've had to deal with. But things are starting to change. Central banks have gone from dovish to suddenly very hawkish. As inflation surges out of control, they're really trying to raise interest rates fairly aggressively now to try and curb inflation. This has seen a relative easing off in most house markets across the globe, where the price rises have definitely slowed and in some cases have started falling. So as a home buyer, there might be a very strong temptation to rush in and get something while the prices are better than they were. Without me actually telling you what you should do, because I'd never do that, I want to look at what it could mean for home buyers if they were to wait a certain amount of time before looking at purchasing their property. This is why waiting could turn out to be an excellent decision if you're looking to buy a home. First, the real effect of interest rates hasn't hit the market yet. From a multi-decade period of falling interest rates, we've only now entered the new environment of interest rates that are rising. In the US, UK, Canada, New Zealand, central banks have already started raising interest rates and have forecasted a continuing of raising interest rates. So mortgage rates will end up rising significantly. However, it doesn't impact everyone at once because many people are on fixed rate mortgage rates and it will take some time before the increased rates will affect them. So we know that interest rates are rising. We know that they're way behind the inflation rate. So it's not going to just be one rise and that's it. It's going to take some time before the central banks are able to get inflation under control. So significant interest rate rises has the potential to massively affect housing prices, in my opinion. Having ultra low interest rates for so long is what's created this bubble type mania, because people were able to borrow more and more and easily repay the interest because the interest rates were basically next to nothing. But now that's all changing. The whole environment has shifted and it's going to take a number of months before the effects start to be felt. Now, as we saw prices rise and rise after COVID, the last 6 months of 2021, I believe we witnessed mass speculation from fear of missing out, from investors trying to cash in on the massive rises, and from desperation from people to get into the market before it's too late in their minds, because they just kept missing out all the time and they just got so desperate. So we could have had 5 or 10% rise that I call froth. It's that frothy nature where people are just willing to pay anything just to get into a house, where you have multiple people competing for a property. So the property goes for 100,000 or 200,000 more than they were originally asking. So this froth might have raised prices by 5 or 10%. But what happens with froth, say on a cappuccino? The froth starts to go down and eventually it disappears. So even before we see price declines from, say, interest rate rises, I believe we're going to see just that froth start to exit the market. We've already started to seeing it in many places, and that's going to naturally just lead to a softening of housing prices. And that can be excellent for home buyers. I'll paint a home buying scenario just to illustrate the point. So we all know prices have risen due to increased demand, and just say fair value for a property might be $1 million to keep it simple. In a frothy market, or a market where there's mass demand and mass speculation, that $1 million property might end up selling at an auction for say $1,100,000 or $1,150,000 or something like that. So what seems to be happening now is that froth is exiting the market. There's more fear, there's more worry coming in. Interest rates are starting to rise. Mortgage rates has really surged. So there's now suddenly less competition, less demand. A lot of the home buyers that wanted to get in early have been priced out of these extreme prices. So they're not even bidding anymore. So now we've got that same $1 million property, but there's only say 2 home buyers interested in bidding, and neither of them can afford $1 million. So you've got one offering $900,000 and another one offering $920,000. So the seller might have to then come down, bring their price down to say that $920,000 and make the deal. So that's the massive difference that you can get just by not buying into a frothy speculative market, or what we might call a seller's market. So at the high end we've got $1,150,000, and at the lower end, we've got $920,000, which would make a huge difference for a home buyer. So because I feel some of that froth has exited the market and will continue exiting, a lot of home buyers might want to rush in and try to snap up slightly better deals. However, it might pay very handsomely to wait. Typically, after real estate booms that we've had in the past, what you would see is a flattening out of prices before a slight decline. Now, those previous booms have been nowhere near as volatile as the last 24 months that we've seen. This sort of action has really been unprecedented. I've never seen this sort of crazy demand and speculation before in my whole experience. So because of that, I'm expecting prices to flatten out, but then fall a lot more significantly, especially because we've come from a place of 0 interest rates to suddenly aggressive interest rate rising. Of course, nobody knows for sure what will happen. I just feel there's a strong possibility because interest rates have been on this multi-decade period of just falling rates, and we've just basically set them to nearly nothing. And then the Fed and many other central banks said we're going to keep them low for a long time, and everyone just thought property, property, property. You can buy it, you can pay no interest, and it's created this pent-up demand, and as prices rose quicker and quicker, more and more people piled in. Now, house prices don't just fall 5 or 10% in a day like you might see on the stock market. We only see prices backwards facing, so after a month we might see what's happened. So they might actually start falling before you even see it reflected in the stats. So why do I think house prices will fall significantly based on aggressive interest rate rises? Firstly, I think it's going to scare a lot of investors away from the market because there is a lot more risk for investors to be buying property now. So less investors will mean less demand for properties. So without so many investors around, a lot of home buyers will not be able to afford the prices that sellers have been getting for properties. Also, with rising interest rates, those home buyers will not be able to borrow as much, or the banks will not be able to lend them as much as they previously would have been lent. So in that example of that $1 million property, a home buyer might only be lent $900,000 from the bank. And because they don't want to max that out, they might offer $850,000 or something like that. So there could well be a gap from what the sellers are wanting, from what they've seen prices get, to what buyers are able to afford. And that will normally lead to that gap starting to decrease as the sellers might come down a bit and the buyers come up as much as they can, and they meet somewhere in the middle. So for the first time, this housing market might be becoming a neutral sort of a market where there's a balance between what the sellers want and what the buyers want. I'd call that a neutral or a normal type housing market. So that sort of normal housing type environment is much better for buyers than it has been. However, there's a situation that could potentially occur which will be much, much better for buyers. And that's what I would call an actual buyer's market. Now, the characteristics of a buyer's market would be that nearly all sellers have to reduce their price to meet the buyers. There's a lot less demand for properties, so the agents will do a lot of chasing of buyers. Buyers will have a lot of choice where they might be able to make multiple offers on different properties, and there'll be a lot of fear in the market, with sellers getting frightened that they won't be able to get out at a decent price. So a buyer's market would be the exact opposite of what we've seen over the last 24 months. It's what could have happened during COVID if the government hadn't have stepped in, dropped interest rates, propped up the market with crazy stimulus. So the big question for buyers is, will we get to that stage over the next 12, 24 months of actually getting into the place where the buyers have all the power? At this stage, it seems very difficult to know. There's still a great deal of demand out there for property. There's a lot of people that missed out. So as prices start declining, there's a lot of people in the wings that will try to be looking to get into the market, which should keep demand quite strong. However, the big factor in my opinion is how fast interest rates are actually risen and how high they actually end up. If interest rates keep rising to really high levels, say 5%, which isn't even that high, but it's so much higher than we've seen for a long time, then mortgage rates might be 7 or 8%, which will have a massive impact on people's ability to be able to pay off their loan repayments. So super high interest rates / mortgage rates is what will really crash the market in my opinion, because that will result in a lot of people not being able to repay their home loans, especially if they got super large mortgage rates over the last short period. So a full-blown crash is probably unlikely at this stage because the governments will do everything they can to avoid that happening. So what I feel is probably more likely is the froth and the speculation exiting the market and then some significant declines, but it probably won't wipe out all the gains seen in the last 24 months. But even if it wipes out half, that would be still very significant. So in some countries like Australia, Canada, New Zealand, prices have risen up to 30% in the last 24 months. So if they were to decline 15%, say, then that wouldn't be a bad result because you've removed some of that speculation and it makes the market more reasonable and less at risk of a future crash. But like I said, it really depends on interest rate rises. Most countries have started raising quite aggressively. Australia, on the other hand, is yet to raise interest rates and keeps trying to hold it off. So it'll be very interesting to see what happens. So if you're looking to buy a home, when would be the best time to buy? Well, I guess it's any time based on your personal circumstances. Now could be the best time for you, but I'll just paint a picture of the things you might want to see in the best case scenario for you as a buyer. Firstly, you want to see auction clearance rates really reduce down to their historical norms. During this boom period, we've seen around about 70 or 80% average auction clearance rate, which means 7 or 8 out of 10 auctions are basically selling on the day. That indicates huge demand and multiple bidders. So as a buyer, you'd really want to see more around 50% auction clearance rates, and even less than that would be great. You want to see homes stay on the market longer before selling. So if the average is 28 days, you'd like to see 35, 40 days. You just like to see that increase in length of times of homes on the market. Another thing you'd like to see is the media start to talk a lot about falling house prices, potential crashes, and all that sort of thing, because that would indicate there's a lot of fear that's entering the housing market. And that fear can build momentum as people start to think, oh no, house prices have dropped 10%. I've been looking to sell my property. Maybe I better get in now and sell it before they fall further. So that sort of fear entering the market can actually increase the fall in prices. So if those circumstances do happen, they would be the opportune time to try and buy a property, in my opinion. Whether you're a home buyer or a home owner, I wish you all the very best. I'm not saying I want house prices to fall. It just looks like that's what could happen. And for all those people that are wanting desperately to be able to buy their own home, it might be a much better opportunity in the next 12 to 24 months for you. I'm Biko Konstantinos. I truly appreciate you watching this video. Since you've made it this far, please subscribe to my channel. I would love to have you on board. All the best with your real estate investing, and I'll catch you in my next video.